Hello everyone, this is Rajnish and I welcome you all to Bulbust Capital's another video. Today in this video, we'll figure out how do we identify trend reversal into the market using chart patterns and setup. See, trend reversal is one of the chart pattern type where we aim to capture maximum number of points in a short period of time with greater accuracy. And why do we tell with a greater accuracy and maximum number of points? See, trend reversal is one of such pattern which is very infrequent and triggers very less number of signals for buy or sell, but carries a very high accuracy. And second thing, it gives us a large scope of capturing the larger data points. In considering current scenario in Bank Nifty, we aim to capture somewhere around 200 to 300 points of movement in a short period of time when we go for a trend reversal trade. See, when you go for this chart pattern types, that pattern types which are more, which triggers more signals of buy and sell are less, comes with a less accuracy, and they trigger more buy and sell signals. But trend reversal trade is one such pattern where we see very less number of signals of buy and sell, but comes with a very higher accuracy. So in this video, we'll capture how do we identify this trend reversal into the market using our own setup and strategies. Here we consider totally three parameters to identify a trend reversal trade into the market. One is the CPR, the second is the time frame, and the third thing is the range. So in each of these section we'll go deep into the details, and we'll explain what does these 3 points mean into the live market. See, considering one is this first point is the CPR. The trading day where we are planning for a reversal trade should not be a narrow CPR. The first point, the trading day must not have a narrow CPR. The second point is the range. By the second thing is the Bank Nifty must have covered a minimum of 500 points within 10:30. Minimum of 500 points and above. Anything above is well and fine. So minimum 500 points it should have covered by 10:30 a.m. If it has not covered 500 points, then we don't look for a reversal trade on that day. Second point is this range. Range must be minimum of 500 points, and over and above anything of 600, 750, 700 is absolutely fine. And there we start finding the reversal trade once it has reached the 500 points and within 10:30. Third point is the time frame, that is 10:30 a.m. it should have covered maximum of 500 points. So these aspects we'll look directly into the chart, and we'll try to analyze how do we identify the reversal trades and plan for the setups. So let's dive deep into it now. Coming on to the chart directly, where we try to identify the trend reversal into the chart pattern, let me explain once again the points we consider for trend reversal. One is the CPR must not be a narrow CPR. Second thing, Bank Nifty must have moved minimum of 500 points, that is from bottom to high, that is low to high. The lowest point of the trading and the highest point of the point at the 10:30 a.m. It must have covered minimum of 500 points and above 500, 600, 700, anything. Third is the time frame. By 10:30 am, this point range must have been covered. Third thing is there must not be a consolidation in the previous sessions. Day 2, 3, consolidation must not have happened for considering it to trend reversal. Okay, so let us now for try to find out in the chart. So this is the chart of a Bank Nifty of 30th May, where we see the first point, this is not a narrow CPR, and the second thing is where is the 10:30, and here is the 10:30 a.m. Okay, and here is the 10:30 am. Now we will see what is the range it has covered. Considering this, it is almost 578 point. Before 10:30 this has covered already 500. Our trigger signal will start once it has reached the 500 point. So 500 point has reached by the time 9:20 a.m. Okay, so what happens when Bank Nifty moves way into a single direction parabolically, or it takes time and moves to 500 points and above in a single direction? Once it has moved, we start looking for a setup. What is that setup? We look for a reversal candles or the reversal patterns. See, there are a few reversal patterns and reversal candles which you need to precise and which you need to get the information. Whatever maximum possible informations are there related to these reversals, I can just share into this video, but you can have a deeper knowledge into this. This is one such candle where see, the first candle is such a big candle and the candle size reduced, and further the candle size reduced, and after the top here the exhaustion has come down and it has made a reversal candle here. Do you see the pressure of selling on the top side of here and followed by a red candle? This shows that already the momentum has ended. I could have ended somewhere around this second candle or this candle. Once this green candle have become a reversal signal is given and this followed by this red candle, I could have entered the trade over here. If not, somebody is very peculiar about that one, to get the confirmation, he could have entered on this candle. See what is the amount of stop loss? Is 165 is the stop loss, and the target is somewhere around 200 plus points is the target. And what is the target profit zone when we look for reversal? Minimum of 50%. The total from top to bottom volatility range is 586 points, and the minimum we look for 50%. Usually the 70-75% of a range can be covered in any of the trades. You will look for the examples now, you might understand. Minimum 50 to 70%. This is the 50% level in the market. So the early you capture, the early you identify the trend reversal, the maximum is the chances of getting the success into the market and having the larger amount of scope for the profit. See, usually I have been trading this pattern for many of these times, and have traded more than 40 to 50 times of same patterns. So what I usually do, whenever this range has got exhausted after 500 points of time, whenever I see exhaustion into the market, like the candles become smaller, starts consolidating in the range, I don't look for any confirmation. This is my personal style of strategy. Please don't follow this one. Always look for reversal candle and then only trade. I know this strategy is 80 to 70 to 90% of success ratio. What I do, immediately I enter into the where is the weakness point. Now this already it has given me a signal here, and I usually enter the trade itself here. What I'll do, put a stop loss anything above 150 to 200. Already market has covered 580 points, okay, from top to bottom. What could be the next best thing here? From 100 to 150 points could have been 750 points. So 750 points, usually Bank Nifty will not move in a single direction with to within 10:30, and I know this for sure that it will not happen 80% of the time. So what I'll do, I'll immediately enter the trade here. And why is this logic that Bank Nifty will not move more than 700 800 points in a single direction? That I'll explain in the last part of the video. Please do stay tuned till the last. So basis of this one, how is this in there is no narrow CPR, and second thing, after 500 points the market has moved, we'll start looking for reversal trades by the reversal candle or the weakness into the market or exhaustion into the market, or it's making any range, there be anything that market will not go higher. What we want to analyze, that market has already exhausted its momentum and here it is consolidating, or it is looking for reversal, or any such candle which could trigger our signals. Okay, coming on to the second example, this is of 13th May, Bank Nifty script. See, we here what we do here is we see 521 points market has moved by 10:30, and immediately see once already it has moved 500 points, we'll start looking for the reversal trades. And this is one of the first indecision candle where we see and followed by green candle. And my trade could have been triggered here somewhere around here. I would look for, after considering the first green candle, look for some pullback, and I would have entered somewhere around here. And my stop loss would have been I would have kept some little buffer somewhere around below the candle, and I would have kept it for 150 points. And the profit would be 50% of the trade, somewhere around 200 points say. See, usually all the reversal trades will completely reverse to the top, but we look only for the 50%. What one could do is one could trail the profit and look for riding the trend continuously. Even if a single trade happens to capture 2 3 400 points, then it's worth taking a risk actually. Okay, here in the previous setup what had happened, this triggered a stop loss, because this from after reaching 60-70% it reversed from here. So such things what you do, once it has reached your 60-70% of profit, you can just trail the profit and you can just leave it to the bottom. So here there is no narrow CPR, and the price has continuously moved 500 points, and we started looking for the trend reversal, and somewhere around here we got the indecision candle followed by the green candle, and after the second candle we look for some pullback and we could have entered somewhere around here. Stop loss, what could be the ideal stop loss for this one? See, stop loss is if it is triggering a signal at 500, 520, 550 points, keep a range of 650 points of minimum range, take into consideration 650 points. Suppose this is 500 points, okay, what I would have done, from here to here, this is 500 points, 459 and 488. Say suppose this candle has triggered the trade. Okay. Usually I keep 650 points total. What is the 650 here? 650 comes to be somewhere around here. Usually I keep 650 as the stop loss anywhere. If it is stop loss is more than 150 point, 200 points, if the stop loss is no, I'll reduce the quantity. If stop loss is below 200, that is 150 points, and I'll trade my trading style of volumes, whatever it is, or I'll plan accordingly. So depending upon the stop loss, you plan your trading quantities. But usually minimum of 150 points is fair enough to keep the stop loss. Always see that 650 points, the range from the top to bottom where you get the 650 points, that is the safest point what I prefer, the stop loss. If you're getting any price nearing to the 650 points could be beautiful. Sometimes you get even 100 points of stop loss also. There you can trade more number of quantities. So coming on to the third pattern one, here we see this is 20th of March 2024, and this is a Bank Nifty script. And here what we see, what is the time? 10:30. Yes, this is the candle is at 10:30, and by 10:30 the market has covered already 555 points, and this momentum has continued till here, because this is the 10:30, and by 10:30 this point has already covered 550 points plus, but it has not triggered any of the reversal candle or consolidation or anything as such. So we are waiting here in the market. After this small green introduced candle, there one more big red candle is there, and followed by a small red candle, and continuous there are two green candles. We will consider this second candle as a reversal candle, because it has already bottomed out from here, and it has made two big green candles, and I would have entered somewhere a trade around here. What could have been my stop loss? My stop loss could have been 270 points, because you have a safer amount of space for capturing also 270 points, and I could have easily got to 300 points. If not, I would have if not full complete trend, if I have not ride the trend, at least one rest to what I could have got it. Because see, this is all 80% and above accurate trades where you can plan the trade even if the stop loss is 200, 250, 300 points. But what I personally trade when it has moved, 720 points, immediately for the first green candle itself I would have traded. Because this is my experience, what it tells that when the Bank Nifty has moved 700 points in a single direction within 10:30, then trend reversal has to happen. And what is the max to max could have happened? If I enter here, I'm keeping stop loss of 300 points, correct? And if I enter the trade here, I could have kept 200 points. Already Bank Nifty has moved 700 points. From there again 200 points, it could have been 900 points. If it is moving 900 points in a single direction, that too after 10:30, then this is not possible, and this is very unlikely to happen. So this is how I feel. See, by 10:30, 10:45, you cannot simply continuously fall like 800,000 points in a single direction with 1.5 hours. This is all very rare. You just do your homework, and it took me only to identify the patterns where we are setup has failed. It took me almost 6 months of trading days to identify one to three examples where your setup has failed, or where we could have wrongly entered into the trade. Just to collect the example, it took me 6 months of trading days. You imagine so much so accurate this setup is. Okay, and even in this setup, wherever it has started, it has reached already the bottom. Complete trend has been reversed in this one. In the same previous example also, it started, it completely reversed. Only this is the one example where it is reversed from the 70%. So here also, do you see whenever it has started reversing, do you see any higher lows are broken? This is one higher low, and the next is the here, and the third one is here, and fourth one. Do you see any of these higher lows are broken? One could easily ride the trend by putting a trailing stop loss. If the Bank Nifty moves 200 points, you just trail your stop loss to 100 points. If it reverses by 100 points, you can just cut off. Even though they see reversal is not required, what I personally feel is I put cost to cost to the SL. I don't trail the stop loss. I put it cost to cost. Once it moves in my favor of 100 to 150 points, I put it cost to cost. What happens if I max to max, I lose the trading day with no loss, no profit? If I happen to get profit, I could ride 300, 400 points. And that is what I want. I want only less number of trades, but higher amount of the points to be captured. This is my personal style. Already we have seen a nice example where our chart patterns and setup has worked out, but we'll see now where our chart patterns has went wrong, and we might face a stop loss. So this is one example of 7th May, and the 10:30 point is somewhere around here on this candle. From top to bottom, it has moved 600 points. It has moved 600 points, and if I was there, I would have definitely taken a trade here, and this has triggered a stop loss for us. This is first example. See, one thing where we could have avoided this one is, tell me, if I have already elaborated all the rules where we could have avoided this trade. First setup is it should not be a narrow CPR. The first condition is not validated because this is a narrow CPR. And second thing, previous day consolidation. Do you see a consolidation over here? Yesterday there was a consolidation. So considering this parameter, consolidation and the CPR is not validating, then I should have not entered into this trade. If somebody still has ventured into the trade, then he could have faced a loss. But you could have easily avoided if you follow these steps very particularly. This is first example. See, this is of another example of where our setup has failed. This is 25th of April 2021. This is a Bank Nifty script, and by 10:30, 10:15 itself, market has already made a higher. From lower to high, this is 600 points. Market has already made 600 points, and it has not even reached the 50% mark of what is usually range. And here our setup has failed. Tell me what has went wrong, and why we shouldn't have entered into this trade. The first thing, CPR is not validating because CPR is a narrow CPR. Second thing, here also we see consolidation. 1, 2 days of consolidation we see, and CPR is narrow. Whenever CPR is narrow and consolidation is there for day or two, then don't venture into reversal trades. So this is has abruptly failed, and this is not at all our setup where trade has triggered. But still, for an example and still for an overview, I have just shown it as an example. See, this is another classic example where our setup has failed, and I guess this is the only one setup where I could find with from last February to post this June. I tried to find the chart trading day where our setup has failed, and literally speaking, and hardly this is the only one setup where actually a trade has triggered and the stop loss has been hit. Let us see. See, from top to bottom by 10:30. 10:30, it has covered 600 points. It has covered 600 points. Immediately after 600 points, we look for consolidation, momentum exhaustion, or any green candle. I could have easily entered, or any of my followers who has started trading using this video might should have entered somewhere around here and put a stop loss of 200 points, and this stop loss immediately got triggered. Here we don't have a narrow CPR, no consolidation on previous days. We have very good range of volatility in the previous sessions, and the trade triggered is as per the condition. Within 10:30 the range is covered, everything is there. This is one example. From February to June, it took me 4 months just to find one proper setup where it has failed, and I could get examples more than 10 types. Even yearly, if you happen to get only 12 trading session where you could write all the 300 400 points, imagine what could be the number of returns. You tell me, 400 points movement, as per the delta movement, you could have captured somewhere around clearly 250 points. Immediately after the first 100 points move, the 0.52 it moves to 0.67, 0.7, 0.75. So somewhere around by end of this 400 point movement, you could have captured 250 to 300 points if it is a very good volatility. Net premium points I'm speaking. Spot price moves 400 points and you happen to buy at the money price, at the money option. So after 400th point of movement, the option premium price have moved 250 to 300 points. Imagine 200 to 250 points in a single trade. And what is the maximum loss? As that's 250 points you happen to lose in a 10 out of 1 or 2 times, then it is worth taking a risk actually. This is one of the superb strategy actually. And there might be legends who might ask, sir, why do you consider this 500 points movement only, and why it is not 400 or 600 points? And that should be a beautiful question. Let me just explain you that one as well. See, once you go with this investing.com, and here in this, if you happen to tell Nifty Bank historical data, and this is a daily time frame, and here it is mentioned price open, this is open price, high price, low price, and volume and all. You just download the data I have mentioned first 2000 to January 2023 to the 31st December of 2023. Here I have downloaded the data. What I have done, I have kept only high and low. What is might do I mean by high and low of this one? This is high of the market and this is low of the market, and this is called volatility of the script. And here this is bottom and this is top. This is top. And what is the volatility here? 857 points. So what do we tell? If what is the volatility for the day? We tell 857 points is the volatility. People might describe it in a percentage, and I preferably go with the points for this one. 857 is the volatility for this one. What is the volatility for here? Top to bottom is 1100 points is the volatility. So we measure volatility for the first 1 year period or the previous 1 year period, or take 6 months period or 1 year. 1 year is a standard one. Now we are trading in 2024, it is June, and I consider whole of 1 year 2023's year volatility range. See what I have done, all the download the data. I have removed the unnecessary columns in the downloaded data, and I have kept only the date, price, the high and the low, because what we know, we want to know only the high and low per data point. What is the number of points covered in the high and low, the volatility range we want to know for the every day. The same for the 1 year data. The high and low difference you can just immediately do it in the Excel sheet by formula, and have considered done the same thing for whole year. This 385, 293, 540, and this thing. For this 385 means from top to bottom of that trading day, Bank Nifty have moved only 385 points. This Bank Nifty traded only between this 385 points from the top to bottom. And total number of trading session in that 2023 was 246 trading sessions. From 1st January 2023 to 31st January 2023, we have got 246 trading sessions. Out of this 246 trading sessions, I have filtered out what is the number of sessions where Bank Nifty traded more than 400. So this 400, more than 400, 146 trading sessions Bank Nifty has traded more than 146 times. That amounts to 60%, 59% rounding off to 60%. 60% of the market time frame, market is trading over and above the 400 volatility range. Means 60% out of 10 out of 6 times the market is between 400 points, high to low, trading between 400 points. Closing can be different, try to understand. This is not this one. The closing can be different. The closing can be somewhere around, market is opening here and reaching the 400 points and comes down to close, and the closes somewhere around between 200 points. Closing can be anything, but the volatility 60% of the time will range from minimum of 40%, 400 points, and less than 600 points is 80%. I know that 10 out of 8 times my Bank Nifty will not go this beyond this 600 volatility range, because if I take 700 points as a volatility range, then that happens to be only 90%. Below 700 points, it will be 90%. That's why in the mid of the video I told, whenever Bank Nifty reaches 650 points, I'll not look for any reversal trade. I'll look for entering the data directly. If only single candle gives me a signal, then immediately I'll enter. What? Because I know that even if Bank Nifty happens to go 700 points, I know that 90% of time market will not go beyond 700 points. If it goes more and above 700 points, then might be a trending day. And if it is a narrow CPR, then it might be a trending day. If it is a consolidation, then it might be a trending day. So when both the filters are again cancelled out, then there is higher likely chances that I could get the top to enter the trade, and I could ride the bottom also. From top to bottom, I can ride the trade. If I happen to get the trade at 600th point, I could have easily kept stop loss of 800 points. That is 200 points stop loss I can keep. If it is reaching 800 points really, then it could be a trending day, or it could be one among 10 days, where the percentage of such thing happening is only 10%. So Bank Nifty trading in 700 points, less than 700 points range is 90% of the time frame. 246 sessions, 219 sessions Bank Nifty has traded between the 700%, and within 600 points it is 196, that is 80%. I look for only for the 80% of confirmation. I don't want to 100% confirmation. 80% is enough for me, because I will try to look for reading the complete trend. So 80% is fine enough for me. As soon as it goes to 600 point, for people who are very new, who are amateur and looking for a proper strategy, please look for a reversal candle. Though you happen to get only the less amount of points to drive, please be satisfied with that one. Because see, we have experience into the market of more than 3 years. We take multiple risks and we balance out of the risk also. So I personally take, as it reaches 600, 650, look for single candle confirmation also, then I take the trade. Please don't follow my strategy. Only look for the proper protocols and then only take a trade. Look for confirmation and then only trade. This thing also you can do it for Bank Nifty also, but I personally trade only Bank Nifty, and this is only specific for the Bank Nifty. This is not for the Nifty. I hope you guys have clarified all the data points. If you like this content, do share, like, and subscribe to the channel for more such videos. See you in the next video. Till then, take care and goodbye.